Hey there, everyone. Another just incredible day in the market. And if you're over at the Discord, you'll know exactly why. And if you've also been watching my videos, then you also, once again, know exactly why. I'm going to talk about the best stocks to buy now for Q3 for wild outperformance against the S&P or really any one of the other major indices, although I did include one of the major indices because I do think it's going to outperform the S&P, the NASDAQ 100, and I also think that it's going to outperform the Dow Jones as well. So that, of course, is the Russell 2000 tracked by IWM. I'm going to show you so far the quarterly results that we have for each of them. Now, mind you, 5 of them I showed in a video on July 1st, 5 more I showed on July the 7th. So to be fair to YouTube land, even though they were already on my list, I didn't officially bring the last 3 out to YouTube until the 7th of July. So we'll look first at the quarterly chart and then we'll go look at the chart that's just from the 7th, just to see that performance, because I also shared it out over at the Discord as well. And if you're wondering how to get over there, open the description of this video, click on the very first link for the Discord to sign up for the earner tier to make sure that you see my expert channel. I'm one of the panel experts over there, helping to support you and the thousands of members already in that community towards financial freedom and also how to build alpha in your portfolio. So not only do I share stuff here on YouTube, but I also exclusively share it over there as well. And you guys can check it out. Use the earner tier, use code word doctor when you sign up. It's going to save you a ton. All right, let's jump into this. By the way, Etsy is one of those companies, and Etsy cashed in today 67% on one of those options. I was out and about, so I couldn't wait and see. I saw 67% up. I took it, but I will tell you that it 3x that options play that I shared out over at the Discord. Anybody who followed me on that one could have taken home 200% profit on that today. So without further ado, let's get into the charts on this, guys. So boom, pop this up here. We're going to click on SPY. So this is the 3-month chart. If you look in the back of the screen here, I have a watermark for you, SPY 3M. That's the S&P 500 ETF SPY. The 3M means every candle is 3 months worth, which means this last candle is the July, August, September candle. The one that's before it is the April, May, June candle that we're looking at. So what this says is that so far we've seen 1.29% gain in the S&P 500. So 1.29%, that is our benchmark that we're judging all 8 of these against. And like I said, about the last 3 of them, that video didn't come out until July the 7th. So we'll also look from July 7th forward to see if we can beat that 1.29%. We'll kick things off with TMF. Now this one, I said, this one's just in case we see that market weakness, which I think that we will see sometime in Q3. Doesn't necessarily mean that we're going to be absolutely in the gutter, but right now we're not seeing the technicals to support an upward movement from TMF. And right now with the rocket moving, the market moving up the way that it is, rocketing upwards, TMF is going to have a hard time anyway. Put the debt crisis aside, TMF, long-term treasuries are going to not do so well while we're in a risk-on environment. But I will tell you for this one, that's the 1-month chart. Let's go to the 3-month chart on this. So 3 months, where do we find ourselves at? As we look at TMF on the 3-month chart, we are actually down 3.62%. So far, I'm 0 for 1 for those calls. Let's jump over to TDOC. And for TDOC, this is another one that I think is going to wildly outperform. The telehealth space, I think, is going to explode. I don't know if we see that $300 price tag come out anytime soon that we saw during the pandemic, but I do think that this thing's going to start marching upward very strong for us throughout 2025, perhaps into 2026. It's up to their earnings to really tell that story and to really make that growth happen. But with the rising cost of healthcare and people looking for more affordable alternatives, and also hospitals shrinking staff sizes and having doctors more efficiently get to more people over time to really help out those hospitals, I think telehealth is sitting right at the crux of that. So for TDOC, TDOC, the 3-month chart that we're looking at, we're up 1.15%. So far, underperforming what we had for the S&P, which is 1.29%. So now we're 0 for 2. Well, let's see if we can balance that out so far. If we want equal weight on each of these, so far we're losing. Moving over to IWM, the 3-month chart, this tracks the Russell 2000 stocks. This is up 4.18% versus 1.29% for SPY. So this is between double and triple what we saw, closer to tripling what we saw from the S&P 500. I said that this is the quarter that we could see IWM put in some outperformance, and so far 10 days in, which is about 1/9 of the way, about 11% of the way through Q3. We're starting to see that outperformance show up for those small caps, 4.18%. So absolutely crushing TMF's minus 3-ish%. TDOC still up, but almost even with the S&P 500. Well, pretty much quadrupling that gain. Not quite, but almost. Next on the list is BBAI. So this one sort of struggling right now, but June, or I should say the previous quarter, was up 137%. Most of that happened between the end of May and throughout the month of June. So over doubling. So a doubling and then a third more would be another way to say that. Still up almost 5%. As I talked about that outperformance for Q3. Now, mind you, we are only 10 days in. We still have 90% of the quarter to go from where we're at right now. We could still see a further climb. I have talked about the softness that we could see in this. So when I talk about these being the best stocks to buy for wild outperformance in Q3, I don't mean it to sound like any of the growth is done for these companies. What I mean is throughout Q3, either at some point, for TMF, for example, sort of underperforming for right now, but it might still have its time to shine. Swing trading is definitely a thing, and it can definitely work on these plays. I actually prefer to use options for those swings. Sometimes I use shares. It definitely depends on how liquid the options are for whatever security it is. If you guys want to know more about options, by the way, how do you do this technical analysis for yourself to find that outperformance, that alpha for your portfolio, to support yourself through that journey towards financial freedom, and if you also want to learn how to use technicals to do your trading, there's coursework through Stockmo Academy. Links in the description. Code word doctor is going to save you a ton on each course. And if you bundle the two courses together, you get an even further discount on top of using code word doctor. Guys, let's jump back into the charts because we go much bigger from here. So far, these are all the July 1st ones that I put out. I have one more for you that was from the July 1st video, if you followed me on this one. So you can see from this low bottom wick here and then this candle, this is a very, very good move, a very positive thing to see for us. This is CLF, so this is United States side steel play that we have, that it took a big old jump up to the $6-ish mark back when we heard about the tariffs for steel and looking for American-made steel. This is one of those plays that I said, this is the one that I think after getting beat up for so long and being near the bottom, this could give us some wild outperformance without too much effort. Maybe this thing could go bonkers on us. Maybe it gives us that $22 mark. I would love to see that, but we're going to have to see what their earnings look like. I think that's going to be another thing that's going to help tell that story for CLF. And I think it could be potentially positive, but up 28.55%. So if you want equally weighted, all the other ones that I talked about 4 others. They could all be losers, and this one would still win out over all of them. So from July 1st up until today's close, so far we're up 28.55%, and I still think that we have quite a bit more to go. Q2 earnings that we see here in Q3 are going to definitely have a lot to say about what happens with the market, but I will say that I don't anticipate them to be bad earnings. I anticipate it to keep the punch at the party for a little while longer. It's probably going to be something else that breaks the market's run. I don't know what it is, but I do think that it's unpredictable when it's going to be. Let's enjoy the party while it's here, and we'll watch for those technical signs that tell us that the sentiment for the market has changed. 28.55%, just wildly outperforming the market. As a matter of fact, let's find out how much it's outperforming the S&P. So 2855 divided by 129. This is 21x outperformance for the S&P for Q3 so far. Now, will it hold out the whole time? I don't know if it's going to hold out the whole time or not. I'd like to see it hold out the whole time, but I will say there's some technicals, and I'll give an updated technical video for this one. This is more giving reason why you should really follow the technicals. Listen to what I'm saying, add it to your due diligence, because it really is very valid. I'm giving every one of the stocks that I had talked about on July 1st and July 7th. I'm not leaving any of them out. So TMF was the worst of the performers out of all of them. Yeah, it's a loser, but I still got to talk about it because I put it out there. I still think that it has its moment, that it's really going to put in some outperformance during Q3. Like I said, I don't exactly know when that is. We're going to have to watch and see. It could be that September month, as September can be pretty terrible for the stock market. Black swans aside and all that kind of stuff. So let's put this back up here for you. There we go. So that one isn't the end of the story. We still have more good things for the story, such as starting the July 7th videos, we have Restoration Hardware. So RH is the ticker symbol for this one. This one up 12.93%. This is the 1 month. Let's go to the 3 month for this one. and 3 months. There we go. So for the 3 month, there we go. So still up 12.93% over June's close, of course. So the 3 month chart on this for Restoration Hardware outperforming, let me see, 12.93. Oh my gosh, that's almost exactly a 10x performance over the S&P 500 so far. Look at that beautiful low bottom wick. I don't think that Restoration Hardware is a bad company. As a matter of fact, I think it's a very good company that fell onto some hard times and that it was overdone when we sold this way, and now we're starting to recover. But watch out for all those low wicks. This is not a technical analysis video. This is giving validity to the technicals that I've put out there. So July 7th video, Restoration Hardware, so far up 10x the S&P 500. If we drop down to the daily chart to see what sort of performance we've gotten since July the 7th. So let's go to July the 7th close, just to be fair for that performance, to talk about where we've gone. So July 7th is here, the close is all the way down there. And from July 7th until now, we're still up 7.60%. So for that video that I put out, we're still up 7.5%, a little bit over that. So easily 5x, almost, actually it's more like 6x of what we got in the S&P 500 just this week since I put out that video for Restoration Hardware. So I hope that you were following along. If we move over to Etsy, this one was awesome today. Let's drop down. Okay, we got the 3 month chart going on for this one. Boom. Let's move the technicals a little bit so you can see, or the chart I should say. These are the EMAs that are on here with this one. Now the last one for you is also pretty awesome. This one, 15.95% so far for the quarter for Etsy. That 15.59%, what is that, like 13 times what the S&P has put out so far? That is absolutely incredible. And once again, I want to remind you, this is not a gloating video. This is a video about the technicals. It's not me who's that good. It's the technicals that are that good, and you can learn them too. The link's in the description for Stockmo Academy for the technical analysis course. It'll teach you the same exact thing that I'm talking about. And I use elements of the bread recipe trading strategy. And guys, it is so good. It is the best that I've ever found. And it keeps me building alpha in my portfolio and certainly mitigating the number of losses that I have, allowing me to keep in the game and keep on building over time and working me and my family towards financial freedom. Just keep on moving those chains forward step by step by step. You guys can do it too. Like I said, when you sign up for those courses, use code word doctor. The options course is really going to help you out too. Start with the technicals if you need it. Go to the options if you don't know about options. They are tight, they are solid, and they can also help you with this as well. So I do think that this also, every one of these stocks, I think has legs to run throughout Q3. Otherwise, I would not be talking about them. I don't think that the moves are over yet. I think that the moves are just starting. So for Etsy, up, what did I say, 15.95%, so almost 16%. But once again, this is a July 7th stock that I put out on YouTube, not July 1st. So if we go back to where we closed at on July the 7th. Once again, just to be fair to whatever we may have had. So closing price right there. And where we go today, we are up 8.37% over where we closed at on July the 7th. So if you watched July 7th and then you started really tracking things, as soon as I saw us finding support down here on this 50 EMA with that long bottom wick, I jumped into the options play today. Strong move up on big volume right into resistance. Once again, not a technical analysis video, but they are companies that I've shared those technicals before. I will redo those technicals to update you about where we're at right now. But this one still, once again, strongly up above 6 to 7 times, probably more like 7 times the performance of the S&P 500. Most likely not done here in this quarter. Probably some strength coming back to it over time. The last one for you in this video is MRNA. That's right, Moderna, the 3 month chart. This one, I think, has been so unfairly punished over time. I don't know that it deserves the price tag that it had. Where was this one at? Close to $500. Look at that, how far I had to go up just to get that wick on this thing. So $497.49, $497.49. That was the number that we had, almost $500 per share. And this thing is now trading all the way down here. And man, it bottomed out around 23. It's currently trading around $34 per share. And the revenue that it's brought in, yeah, it's a lot lower than it was during the pandemic. It is so much higher than it was when it was trading back here, back in those 2020 times when it was like, hey, vaccine, you know, all those words coming out about COVID, all that kind of stuff. This company, I don't think is down and out. This company, I think, is just getting started. And I think 2025 to end it. 2026 is where things start to get very bright for it. We'll watch and see if the technicals, not the fundamentals that got me into it though, but I do find the fundamentals, even though we don't see it in the numbers yet. Well, how would Jerome Powell say that? It's not in the hard data yet, but it's in the soft data when he was talking about recession stuff. Well, for Moderna, I think that it's a company that has that promise over time, but I think that's the soft stuff right now. That's the lofty aim of the fundamentals that they're striving for. It's what they're working towards, and that's probably why you saw it get beat up as much as you did. But I do think that it's a company with staying power that's going to put out some wild profitability over time and really going to start returning to its investors. And before I'm ready to put out an actual investment in it, rather just trading cash, if you will, using it for alpha in my portfolio to fill out my long-term positions, this is one that I still think can outperform wildly in Q3 of 2025. For Moderna, back to the chart on this thing. We've actually, on this, we're trading around $34 per share. We got 24.25%, about 20 times the performance of what we saw for the S&P 500 just here at the beginning, just 10 days into the quarter. And once again, this is one I covered on July the 7th. How's the performance been since? We'll go with the close on July 7th until we get to today. So July 7th, we'll get to the closing price. It was right there. And then to today's close, up 12.43%. So still, just since I've covered this thing, it's 10x performing what we saw for the S&P for the entire quarter. So from July 7th till now, it just wild movements for these. Again, the technicals are what I use, the analysis in the charts. And once again, this video is about convincing you that if you're not using the technicals that I have here, that you're doing yourself a disservice. So if you're looking, how did these people know this? How do they do this? Well, I can't speak for the others. I can speak for myself. And what I can say is that using the technicals here, whether it's that we're moving strongly in a bull market, moving strongly in a bear market, or maybe we have mixed signals, the technicals can tell you exactly what to do that can help you to be as accurate as possible. You're not going to win every time. Nobody does. But it can help you to win more often than you lose. And it can also help you to protect your capital, to limit your risk, and also help you to catch that additional reward, that additional upside as well. So tons of wild outperformance. I think we were total was 6 for 8. So 75% success rate so far that we have that outperformance, and we'll see how the S&P performs throughout the entire quarter. By the time we get to September the 30th, what sort of performance we get. Now, mind you, because these are technical plays, I don't know that it's going to last the entire time, but from a swing trade perspective, you could have swung for all 8 of these and you would have hit 6 for 8 and got that outperformance already. As a matter of fact, some of them probably outperform what the S&P is going to do for the entire year, especially when you're starting to talk over 20% in that movement that you have. So to me, that would also, if it's a swing trade, you catch that swing and that you also build that extra capital, you get that outperformance, and you can look for that next swing along the way. And now, mind you, buy and hold is a very valid strategy, and over long time horizons is probably one of the most winning strategies that you're going to find through compounding. But I got to tell you, like this technical stuff, the short-term stuff, especially the momentum type trading that I do, even though some of it's intraday, I do like the longer time period that allows us to catch additional upside that we would otherwise miss. A little bit slower. It can sometimes be a little bit less risky if you're holding the shares. Options are a different story because of overnight risk and theta decay and all that kind of stuff. But I will say that I'm very pleased with how these perform so far. And I think every one of them still has an outperformance story that's continuing throughout the month of July, perhaps even throughout the entire quarter. We're going to have to update as news comes along. And if I have to drop something from the list, I'll drop it from the list. Just because something either wildly technically has changed or wildly fundamentally has changed that I just don't think that it should be there anymore, and then I will move away from it. So guys, let me know what you think down in the comments of these videos. If you want to come over to the Discord to see how I'm trading these, to see what the other panel experts are doing, to talk with the thousands of community members, to talk with us, to see our expert channels, to get the Ask the Experts channel. Sometimes words are hard. I'm very excited here. So all that stuff through the Discord. Sign up for the earner tier so you get unrestricted access to everything that's available to those community members. That can help support you in this journey towards financial freedom. You get to celebrate with us during these up times when we're wildly bullish. You get those support. And also, believe it or not, with options, for example, being able to short things effectively when things get dumpy, like we saw back in 2022, over at the Discord, we will show you how to play those times when things are dropping and how to take advantage of them. So you don't just have to kind of sit and lose cash. You can actually sit and read the technicals and make your decisions that actually help you during those times. Bull market, bear market, you name it, these technicals, that technical analysis course that I talked about, the options course, they can tell you how to trade in pretty much any environment, high volatility, low volatility, you name it. It is rock solid. Both courses, rock solid. Use the bundle. It's going to save you a ton of cash. Code word doctor, whether it's the bundle or the individual courses, is going to save you a ton more. Guys, thanks for watching. I do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.